Lately, I've been seeing a lot of people talking online about how it feels like we're in a bubble, everything's going up super fast every day. But are we really in a bubble? Like, is it really as crazy as it seems? I wanted to find out. So, what we're going to do is we're going to take this tier list. We've got a bunch of AI companies, and we're going to compare their market cap valuations to their revenue and see how crazy everything is priced in. We're going to have three categories. We're going to have reasonable, expensive, and pure speculation. So, if we're in a bubble, you should see everything in expensive or pure speculation. But we're going to find out how everything is looking, maybe even see what some good buys are right now. So, let's get into it. First up, we're going to start with King Nvidia. Nvidia is a chip maker and they make everything from gaming GPUs to the extremely powerful GPUs used in AI data centers. They're considered the backbone of the entire AI revolution, and honestly, they're probably in the strongest position out of any company in the world. They're also the largest company in the world, and their market cap sits around $5.4 trillion. Their annual revenue comes in at roughly $215 billion. That means that investors are valuing Nvidia at about 25 times annual revenue, which I would put in the expensive category. Next up is Microsoft, because Microsoft is one of the largest software companies in history, and it's also become one of the biggest AI players through its partnership with OpenAI and cloud infrastructure. Their market cap sits around 3.4 trillion and annual revenue comes in at roughly 280 billion. So I would say Microsoft is in the reasonable category because that's only about 12 times revenue. Next up, we've got Google. We all know Google. You've got Google Search, YouTube, Android, and Google Cloud. They're integrating AI deeply into every product they own while also competing directly with OpenAI through Gemini. Gemini's pretty cool. Google's market cap sits around 4.5 trillion, while annual revenue comes in at roughly 400 billion. So Google's trading about 11 times revenue, which I'd put in reasonable. Next up, Meta. Meta owns Facebook, Instagram, WhatsApp, Threads. Threads doesn't really count, because come on, who uses Threads? But they own Threads. The company's spending tens of billions of dollars building out AI infrastructure in an attempt to become one of the dominant AI platforms. We'll see how that goes for them. Their market cap sits around 1.5 trillion. Annual revenue comes in at roughly 200 billion, and that means Meta trades at about 7.5 times revenue, which is actually really reasonable for a tech company. So Meta is definitely going in reasonable. AMD is Nvidia's biggest direct competitor for data center chips, and honestly has had a huge comeback story in the past year. Many investors see AMD as the strongest challengers to Nvidia, so AMD's market cap is sitting around 800 billion right now after its crazy run, and its revenue comes in at about 35 billion. So AMD's trading at about 23 times revenue, which we're getting into the expensive category, so we're going to put AMD into expensive here. Next up is going to be Broadcom. Broadcom, look, I didn't even know what they did a couple years ago, but it's quietly become one of the most important AI companies in the world because they build custom AI chips and hardware for some of the largest cloud providers. Their market cap is at a huge $2.2 trillion, and their annual revenue comes in at $64 billion, so it's trading at about 34 times revenue, which is definitely going to go in the expensive category. Taiwan Semiconductor is a huge company. They actually make a lot of the chips that Nvidia, AMD, and Apple depend on. Their market cap is sitting around $2.3 trillion and their revenue comes in at 120 billion. This means that they're trading at about 19 times revenue, which I would just barely put in the expensive category. It's nothing crazy, but it's still expensive. Next up is Micron, and Micron might be the hottest stock on the stock market right now. They make memory chips, which is a huge component for data centers. As AI data centers become larger and need more memory, Micron is in a perfect spot to supply this and make a bunch of money. Their market cap exploded to $1.2 trillion, and their revenue's coming in at 37 billion. So Micron's trading at about 32 times revenue, which is definitely going to be in the expensive category. The next stock on the list is Marvell, and I don't know, I feel like a lot of people pronounce it Marvel, but I'm going to pronounce it Marvell because that's how it's spelled. But they make networking chips, and they're another AI infrastructure play. They've blown up in the last year. Their market cap is sitting around 220 billion, and their annual revenue is only at 8 billion. So they're at about 28 times revenue, which is definitely going to be in the expensive category. Next up, we've got ARM. ARM has absolutely blown up over the last month or two. You should go see this chart. They use chip architecture that's used in billions of devices, and they're becoming increasingly important in AI computing, but their market cap is sitting around 435 billion, and their annual revenue, it comes in at 5 billion. So ARM is trading at about 87 times revenue, which is actually just the pure speculation category, is ridiculous, and it's mostly because their chart has absolutely blown up in the last couple months, so it'll probably come back down to reality, but who knows? Next up, we got Intel, and Intel was once the undisputed king of semiconductors, but it has spent the last several years trying to regain its footing because Nvidia, AMD, and TSM is eating its lunch. Intel has climbed back a good amount of what it lost over the last year or so after Trump kind of pumped it, and its market cap sits around 550 billion, and their annual revenue's coming in at 53 billion. So Intel's trading at about 10 times revenue, which is back in the reasonable category. That's really not too bad. Next up, we got Dell, the ancient computer company. Now, it might not be the first name you think of when you hear AI, but they've become a major supplier of like AI servers and infrastructure. Their market cap is sitting around 300 billion, and their annual revenue is coming in at about 113 billion. So Dell trades at about a 2.7 times revenue, and that's very reasonable. Dell has absolutely blown up over the last month or so, and it honestly might keep going because it's not even valued at like a crazy amount. Next up, we got Nebius, or Nebius, I'm gonna say Nebius. They're a smaller AI infrastructure company focused on providing cloud computing for AI developers. Their market cap's sitting around $70 billion, and their revenue comes in at 530 million. So they're at 130 times revenue. It's a hot name, but it is pure speculation. This thing is priced for perfection, so that one's looking a little scary for sure. Next up, we got SanDisk. They are another memory company, and they have blown up over the last year. They spun off of Western Digital about a year ago, and they went from like $30 or $40 all the way up. They're sitting around like $1,600 to $1,700 a share right now. It's a classic name, but the AI infrastructure boom has just had them take off. Their market cap's sitting around 260 billion, and their annual revenue's coming in at about 7 billion, so they trade at about 37 times revenue, which is honestly getting into the pure speculation category still, so we're gonna put them there. CoreWeave is an interesting one. It's a pretty hot stock. It has wild swings both up and down, but they rent amounts of AI computing power to companies that need access to it, so that's pretty interesting. Their market cap is about $70 billion, but their annual revenue is coming in at $5 billion, so it's trading at about 14 times revenue, which isn't too bad. It's still in the expensive category, but really not that bad compared to some of these other names. Supermicro is an interesting one. So they build the server hardware that powers a lot of AI data centers. They were a huge winner, but they've gone through some controversy. I think they had some fraud allegations and some people had to get fired, whatever it may be. It was a little bit of a mess, but they're still hanging on. Their market cap's sitting around $30 billion right now, and their annual revenue seems to come in at about $22 billion. So they're trading at about 1.4 times revenue, which is very reasonable. I'm sure there's something underlying that is scaring investors off, whether it's the fraud or fear of delisting. There's a lot of risk to it, but from a valuation standpoint, it's really not too bad, so they're going to go in reasonable. Next up, we got a few smaller names that are definitely a little interesting, so we're going to start with BigBear.ai. They make AI software for government and defense applications. Their market cap is about $2.5 billion right now, and their annual revenue comes in at about 130 billion, so they're trading at about 19 times revenue, which is in the expensive category for sure. Nothing crazy, and they're a little company, so we'll see if they grow over time, but for right now, they're still kind of pricing in a lot. SoundHound AI is the next one. I'm sure you've seen this stock if you look at AI stocks, because they're a hot one with retail investors. They specialize in voice AI tech and stuff like that, so investors have piled into the stock just hoping it becomes a major winner. It hasn't really gone anywhere too crazy, but its market cap sitting around $4 billion, and their annual revenue is about 170 billion, so SoundHound AI is trading at about 24 times revenue, which is going to be in the expensive category. Again, nothing crazy, but retail piled into it. It's a speculative play a little bit, so it's still going to be expensive. The next smaller company is going to be C3 AI. Its ticker is AI, which is probably half the reason that people put their money into it, but They provide AI applications to governments and large enterprises, so their market cap's sitting around 1.7 billion right now, and their annual revenue comes in at about 390 million. It's really not too bad. It trades at about 4 times revenue, and it's going to be reasonable for sure. And last but not least, we have classic Palantir. Palantir is such a hot name. It blew up over the last couple years, and if you've looked at the stock market for more than like 30 minutes, you've probably seen this ticker. So they develop software that helps organizations analyze massive amounts of data. They get government contracts, and they're kind of a defense name, a software name. It's pretty interesting, but they're going to be sitting at around 385 billion, and their annual revenue is going to come in at roughly 4.5 billion. So Palantir trades at about an 86 times revenue, which is pure speculation. It should honestly get its own tier of just like WTF, because this valuation is crazy and it has been crazy for a while. So the revenue is growing pretty good, but still, pure speculation. It's pricing in perfection. So here we have it. Here's the full list. It's honestly pretty evenly spread. You've got your reasonable, proven companies. You've got expensive companies, which you're going to see in markets that are up this much. And then you've got your pure speculation. So are we in a bubble? I don't think so. I think some companies may be, like ARM, Nebius, SanDisk, Palantir. They're all priced in to perfection. They're going to be up there, but overall, like these expensive companies, it's kind of how it goes with tech. They're growth companies, and with the AI revolution, growth is expected. So I feel like it's not too crazy to have a lot of expensive companies on this list. Honestly, the fact that there's a lot of reasonable companies still is pretty hopeful. And if you haven't gotten to the party yet and you need to buy some names, you've got good ones to choose from: Microsoft, Google, Meta, Intel. Not so much SMCI and AI, but you've got good names out there still. So if we're really in a bubble, you're going to see all these companies at least expensive or just pure speculation rated. So for now, the market can definitely come down from here. It's gone pretty much straight up in the past couple months, but it's nothing we haven't seen before. So if I had to decide, I would say we are not in a bubble yet. We could be there in about 3 months if this keeps going at the same pace, but for right now, I think we're okay. So let me know what you think. Let me know if you think that we're in a bubble, and I'll argue with you in the comments. But thanks for watching. I'll see you later.